Back home, Jamaica's economy is estimated to have grown by 6% in the January to March quarter. The Planning Institute of Jamaica gave the details during a press briefing on Wednesday. Our business reporter, Javon Keys, has more in this report.
The Planning Institute of Jamaica (TVJ) gave the preliminary economic findings for the January to March quarter, which reflected a 6% growth for the 3 months. This represents 4 consecutive quarters of growth since the economic decline experienced due to the pandemic. Director General of the TVJ, Dr. Wayne Henry, addressed the briefing.
The outturn for January to March 2022 largely reflected the impact of 1. Increased external demand, especially for Jamaica's tourism product. This was facilitated by a relaxation of public health and social measures, particularly travel restrictions. This development was reflected in the positive performances for the transport, hotels and restaurants, and other services industries. And 2, increased domestic demand associated with higher levels of employment and operational hours as more industries gradually returned to normalcy.
The uptick was positively affected by growth in agriculture, manufacturing, production, construction, and services, especially restaurants and hotels. The mining sector, however, saw a 64% fall-off, mainly due to the fire that interrupted operations at the Jamaica plant in Clarendon last August. Meanwhile, the TVJ says the country's economic growth is being threatened by rising commodities prices, including fuel. This is linked to the Ukraine-Russia crisis.
The war is expected to delay the recovery process due to its negative impact manifested through higher commodity prices, particularly crude oil and grains, for which Russia and Ukraine are significant market players. Russia also plays an integral role in the global production of fertilizers. The resultant adverse impact on the cost of living for households and the cost of production for firms is expected to have a dampening effect on economic activity.
Meanwhile, Dr. Henry says growth for the 2022-2023 fiscal year could be slower than initially projected.
The projection for the fiscal year 2022-23 is for growth within the range of 2% to 5%. This revised forecast, down from the previous range of 3% to 6%, takes into consideration the high degree of uncertainty surrounding unfolding global developments, including the impact of geopolitical developments associated with the Russia-Ukraine war.
He says if the war continues to the end of the fiscal year, growth will likely be at the lower end of the projected range. Javon Keys, TVJ News.
And we'll have more from the press briefing a little later on in the business day.